Welcome to Blind Spot. I'm Steve Reardon. Very happy to have with me this week Matt Mcilwain. Matt is the managing director of Madrona Venture Group, a Seattle-based venture capital firm. Matt invests in a broad range of software-driven companies with a focus on cloud computing, intelligent application, and the intersection of the digital and physical world. Before joining Madrona in 2000, Matt was the vice president of business process for the Genuine Parts Company. He was also an engagement manager at McKinsey Company, concentrating on strategy and marketing in technology-driven sectors. And prior to that, worked in investment banking at Credit Suisse. Matt has been named several times to both the list of top 100 venture capitalists by CB Insights and the New York Times and the Forbes Midas list. Matt is a graduate of Dartmouth College and holds an MBA from Harvard Business School and a master's in public policy from Harvard's Kennedy School of Government, which we're going to sincerely try not to hold against him.
Thank you.
Welcome to the show, Matt. So I'd love to get a little bit of a feel for kind of how you got into venture capital, like how your career led to you being here and kind of this role.
Well, sure. Well, not the usual way.
Right.
I was, as you mentioned.
Is there a usual way?
There are more possible higher probability ways and less probability ways, and I took the less path. Right. After working at McKinsey for a number of years, I joined a terrific company in Atlanta called Genuine Parts. Napa Auto Parts was our biggest business. So I went from selling auto parts to being a venture capitalist.
Right.
But the rest of that story is in the late 90s, all of these traditional businesses like Genuine Parts were going to be either disintermediated or they needed to innovate by embracing the opportunities of the internet. We were taking the embracing approach and met a lot of the folks that were both the venture capitalists and the companies they backed, including my current firm, Madrona, who had some different businesses that we ended up partnering with. We also explored a joint venture between Amazon, which Madrona had been the first investors in, and Genuine Parts Napa subsidiary. And while that never worked out, it wasn't the right timing, I ended up joining Madrona shortly after that.
And how do you think about, I mean, you were obviously more an operator than you were an investor. Like we talk about this a lot. Do you think there is a difference in kind of the makeup of someone who makes a great kind of commercial operator versus the makeup of someone who makes a great investor?
Well, I think there is a spectrum, right? If you really want to paint the spectrum, you've got sort of pure academics on one hand, and then you've got sort of operating folks on the other. And, management consultants, investment bankers, even venture capitalists, are somewhere short of being pure operators.
Right.
So when I look back at my set of experiences, having had a taste and a chance to do all of those things was really valuable. I think what the most valuable thing was the operating experience, understanding how people make decisions in the real world, how things, from a management perspective, from a strategic perspective, from a day-to-day operating perspective, was very valuable in some of those early years. When I got into venture in 2000, it looked like everything was up and to the right, and pretty quickly everything was down to the left.
Right.
It was not looking good. Happily for us, we had capital and we had a kind of a strategic focus here in the Pacific Northwest, and that served us very well. And, I'm just delighted that, those operating experiences led into a set of, venture experiences. Because that's a whole other thing, right? The learning how you can effectively be a good investor, a good board member, a good company builder, which is what I think kind of good classic venture capitalists do.
Well, talk to me a little bit about that. Like, how did you go about learning how to be, from that operating experience, being a good investor, being a good board member? Is it a coaching role? Is it like moving from being a player to a coach, or is it something in between?
I think it very much is a coaching role. We actually have this expression where we'll say, you want to have CEOs that you work with that are coachable, but not too coachable.
Right.
And what we mean by that is if they're too coachable, then they don't have their own convictions and ideas of how to run the business. And, probably somebody else needs to be the CEO then, and probably isn't us. So, that's a kind of dynamic that you're really, watching for. But, I appreciate the fact that our CEOs do want to hear our point of view and will take that in and ultimately decide, in running the business, what they think is the best thing. So I think our business is one of coaching, of pattern recognition, of understanding the particular problem that company's trying to solve and how they're building products and solutions to solve it better than anybody's ever solved it before. And there is some patterns and science to that, and then there's some art to that.
Right. Tell me a little bit about the difference between that and kind of your role as an investor and then the role of the board. How how do you find, have you seen anything that makes boards more effective or less effective, or board members more effective or less effective? It was kind of interesting that, the US for a long time had CEOs in these large companies that were both the CEO and chairman. And it feels like that, there's obviously a big move away from that now, although it still persists.
Yep.
How do you think about all of that?
Yeah, well, to your last question, the CEO job is a big job.
Right.
And, if I was in a CEO's shoes, I would want to have a group of board members that can help me, give me advice, share perspectives that help me in this role of CEO be as effective and successful as possible. So I think that having boards that are, engaged, that have a complementary set of skills, and that have a stylistic approach not only with the CEO but amongst each other, that they can all work together to add value to the business. That's the combination we're always looking for. In the early days, it's usually a combination of the founders and the earliest investors, which is us most of the time, and then maybe one outside person who's got a lot of domain expertise in the kind of problems that they're trying to solve. But culturally, I think you're trying to have good, open, regular communications. And then, I'm on the phone every day with our different CEOs with different topics, questions that could be, they've got a big sale that they're trying to kind of close, and we're kind of brainstorming on that. Could be a partnership, could be a key hire, could be a big strategy decision. We're trying to put our weight down on, one partner or another, or one segment or another. And so there's a lot of those things, but you want, again, back to the earlier points, people that are engaged, have some domain expertise, and are focused on long-term company building.
And moving to the founders for a bit, I mean, so in the venture world, you've obviously interacted with a lot of different founders, and there is some art and science and all of this, but have you developed some sort of pattern recognition of seeing founders and thinking like, that is a set of expertise or a set of qualities that you think are highly correlated with success?
Yeah, so I have a kind of a triangle of how I think about founders. And the first thing is that, much, much more interested in founders that come in talking about a problem, a customer-defined problem. Now, it could be an opportunity. And what I mean by that is like, hey, there's some things that are happening in the world that have created this opportunity that didn't exist before, but it's a problem that they're trying to solve. And then the next thing is that they have an understanding of why it can be solved better than it's ever been solved before, right? So this whole idea of, we've got these big waves that are going on now, kind of next generation cloud computing, or even 10 years ago, cloud computing itself as it became a beginning of a wave, or applied machine learning, which we call, kind of intelligent applications, or how we interface with content and compute. We use our eyes and our sound, our voice, and the computer talks back to us and sees back with us. That just didn't exist 5 years ago at any kind of scale.
Right.
And now we have Alexa, and now we have Cortana and Siri and all these sorts of things working at some level of scale. So the second piece of that triangle is actually an understanding of the big technological waves of why you can solve this problem better. And then the third is that founding team has some ability, both on their own and through attracting others, to actually build the solution that's going to solve the problem. And so when you see that triangle lining up, and in your best judgment, that market timing is right to kind of go start something, there's a better chance that might be a fit for something that we could back. And of course, since we only make a very selective number of investments each year, you're also trying to see which are the ones that have that potential to end up being quite big.
Right. And moving beyond the founder, almost all the founders end up in a CEO role. Do you think a little bit about like attributes that make founders good at being a CEO and good at being a long-term CEO? Not all founders go the distance with the company they start.
Well, we're very pro founders, and we've had a number of founders that have, as you say, gone the distance,
Right.
Sujal Patel at Isilon, Sunny Gupta at Aptio, Carlos Gestrin at Turi. I think just to name a handful of examples. We've had other founders that end up, playing a chief technology officer role or more of a product role over time too. And those can both work really, really well. I think what you're looking for is this kind of customer centricity in a founder. You're looking for somebody who understands that they're really the chief sales officer. And what I mean by that is not just the narrow notion of selling the product, but how are you selling investors?
Right.
How are you selling customers? How are you selling partners? How are you selling employees? Like, how can you convince somebody to leave their nice, big job at Amazon, Microsoft, whoever else, and come work for this small startup. And so that's another key thing. Of course, there's the classic, kind of notion of determination and tenacity that you're looking for. But the last one I'll say, which is maybe a little, surprising at times, is humility.
Right.
And humility means, not thinking that you have all the answers, because none of us do. And so how do you approach things with kind of a genuine sort of open hand to, we need to learn more about this. We might have a good idea, but what else can we learn?
Right. Yeah, that's really interesting. I want to zoom out a little bit and just talk a little bit more about kind of the private company landscape at the moment. So we obviously had, some high profile IPOs going on. Ben Thompson wrote a really interesting thing about the Uber IPO and just some of the downfalls of these companies staying private for longer. One of which being, just the reduced kind of transparency and accountability the longer they're private. And the other one is, which I'd never thought of before, is that actually in these later rounds of funding, you're eating up potential IPO investors, and then that actually ends up with these IPOs being softer than they'd like. Is that something that concerns you, or something that you think about in terms of how you exit these businesses later?
Yeah, well, I have a ton of respect for Ben. I think the issue with some of these IPOs that are particularly ones that are more consumer-oriented, brands, is that they are really great businesses and that they're going to be successful in the fullness of time. They just became mispriced in the later stages of as private companies. They were overpriced. And I think there was a bit of a mindset that, you could always sell this to the public company investor, whether it's an institutional investor or an individual investor, and they'll pay a higher price still.
Right.
That proved out not to be the case. And partly because it was overpriced, and partly because there are still risks in these businesses, notwithstanding my positive comments about the businesses. There's a lot of scale to make an Uber or a Lyft successful. There's some degree of diversification with things like Uber Eats that kind of help complement it, or kind of the Uber logistics types of initiatives. So I think it was more of a pricing issue. I think what you should note is on the other side of the equation, on more the enterprise side, the opposite's been true. You've had several spectacular IPOs. And there's a group of them I call the Moxie 5, which is, MongoDB and Okta and Coupa and Smartsheet and Zscaler. Now you could add Zoom to that list.
Right.
All those companies in the last couple of years that are subscription-based businesses, enterprise focused, have not only priced and traded well on their IPOs, but have had several quarters of very successful results. So, but most of those companies priced in the kind of, $3 to, $8 billion valuation range, not the $50 to $80 billion valuation range.
Right. Were they more disciplined about the amount of time they took to go public? Is there an element to that?
They were probably not that different in the amount of time. I think they were maybe different in terms of the capital they raised and how they managed that capital. I'm on the board of Smartsheet, which is one of those 5.
Right.
And they've just been super balanced about when and how much to invest in capital. And then now that they've, had quite a really dialed in their model, both their bottoms-up model, but increasingly their kind of top-down enterprise model, they've really accelerated their growth and investing into that.
In terms of your role at kind of in the venture world, how is the impact of there's obviously been an influx of money over the last couple of years, SoftBank's Vision Fund being one. Have deals become more competitive, and how have you thought about remaining competitive against just kind of large check size?
Well, I think that, it's super important to have a clear strategy and to understand, kind of what are your strengths and your weaknesses. For Madrona, our whole strategy is around day one for the long run in the Pacific Northwest. So what does that mean? We're willing to get involved early. We're willing to get involved at the founding of a company, and there's a whole bunch of those examples. I mentioned Turi, another would be Exnor recently here, Amperity, Soplari, certainly the Aptios and Smartsheets of the world.
You've even gone down the route of incubating companies out of your labs concept.
We have Madrona Labs. We fund and partner with the Techstars and other organizations in this region. We have something called the Pioneer Fund. So all these are different ways to be involved early, and sometimes to be involved big early. And then be there, 10, 12, 15 years later. We've had 4 IPOs in the last 3 years, and I think the average amount of time from our first investment to the IPO was 12 years. So do you have somebody on your team that's going to be there as an investor and as a board member, as a partner for the long run? And then for us geographically, there's not a lot of indigenous early stage venture firms in the Pacific Northwest. And yet we've got the number 1 and number 2 by market cap companies in the world based here, and some incredibly talented people. So you look at that and you think, well, our chances are good. Now, mid-stage, later stage, gotten pretty competitive. That generally works in our favor and our company's favor, right? Because we're already in there.
Right.
But I think the key there is not as much a market cycle like now, which is very favorable to the companies in terms of valuations and terms. It's not as much like raising money at those levels. It's more what you do with the capital, because ultimately every dollar you spend demands a return. And there could be a big macro downturn. There could be tough times. I mean, I was fortunate, to your earlier question, to get involved with venture when there was this downturn. And so you learned a lot about why all those terms do matter and what are the implications of them and how to manage through those sorts of things. Someday that'll happen again. I hope it's a while off, but it could happen, and it will happen.
I'm interested in the geographical focus on the Pacific Northwest. So Seattle, it's kind of interesting to me. Everyone's trying to be a Silicon something, right? A Prairie, a whatever. But sort of quietly over the last 20, 30 years, Seattle's carved out, as you said, the two largest market cap companies in the world, a thriving tech economy. What did Seattle do right, if anything? And I know there are a lot of challenges in the city at the moment, but what did they do right in order to get some of those things in place to actually succeed?
Well, yeah, I mean, we'd talk about this being the cloud capital of the world, and I think that's a pretty easy argument to make with the, AWS and Azure here. And by the way, over 5,000 Google employees and a lot of their cloud team, and I could go on in that regard. So whether you call it the software sound or the cloud capital of the world or whatever, we've got some pretty special stuff going on.
Looking out of your window today, it's living up to the cloud capital of the world.
Yes, unfortunately, that's more often than not true. I think it's a combination of things, and some of that's strategy, some of that's good fortune. Bill and Paul were kind of playing with the machines over at the University of Washington. The fact that you have the major university in a city often matters. The fact that there was the history with Boeing. The fact that there was an entrepreneurial spirit and culture that goes back to, UPS was founded here. Nordstrom, of course, is here. Which out of Boeing, United Airlines became an airline, and later Alaska Airlines. You had the whole mobile industry in the 80s with McCaw, which became AT&T Wireless, with, VoiceStream, which became T-Mobile. People maybe don't fully appreciate the richness of all of this. But ultimately, I think it was Microsoft as an anchor tenant, and then the revitalization in the last decade of Microsoft and their bet on cloud, and then Amazon and the, kind of the juggernaut that Amazon has become. That just really impacts the ability to attract talent, not only to those companies, but to all of the other places around it. The biggest change in the last decade here has been that we have over 100 major offices of other big tech companies from around the world, Alibaba to Pinterest to Facebook and Google. And now you've got this both critical mass, but also diversity of perspectives, which I think is so critical in every aspect of life. But certainly in the tech sector, you don't want everybody just thinking like a software company, which would be more Microsoft, or kind of a marketplace and merchant company, which is what Amazon is, or an advertising company, which is what Google is, or a social network. We want to see talent and perspective that comes from a lot of those different, worldviews that can then find the next big breakthroughs, and then that becomes a virtuous cycle.
How do you, when you look forward on kind of some of the successes Seattle's had, I mean, my perception is that the city has always been very business friendly, friendly to its founders, its owners, its CEOs. It's clear that especially in downtown Seattle, there's some pushback. The entire thing about, wealth disparity is becoming more of a hot button issue for Americans more broadly. Do you see Seattle becoming less business friendly? The sort of tax that was imposed last year and some of the initiatives the city council has tried to get through?
Well, I think the state of Washington and Seattle have had a structure, and no structure for aligning with the business world is perfect, right? And consumers and individuals, right? But we've had a structure that it kind of encourages people to come here. It encourages people to invest here. It encourages people to consume here. Kind of we have more of a sales tax orientation versus having no income tax. So that's a pretty good pro-investment, pro-attracting people, system. It's got its pros and cons. I think what I would say is that there has been a lot of rhetoric in the last decade around sort of the haves and have-nots. But when we try to look objectively and we say, what has been the benefit to all of us as a state? You look at the state tax revenues, the revenues growing from 28 billion to over 50 billion in less than 10 years. That's benefiting everybody.
Right.
We have the lowest or near the lowest unemployment rates in the city of Seattle and the state in the history of the state, and the city. And we also have double the national wage growth. So we've got so many things that help the broad community. We also have challenges. We have real challenges with homelessness. We have real challenges with affordability. We have real challenges with transportation. And what I think has been disappointing, particularly with the city council, has been an inability for there to be a partnership between the business community and the public sector. Right. It seems like there's sort of division as a strategy. And I think that has gotten to a place where, Microsoft to some degree, probably even more so Amazon, people get frustrated with it. They're like, is this not a collaborative environment to be partnering and working together? And I think at some point that is, we're already seeing it, right, with the launch of Headquarters 2, Greater Washington, D.C., Crystal City, even the move to Bellevue.
I thought, I was going to say, I was like, isn't Bellevue HQ2?
That's HQ2.5. And, that's honestly, if I was, Mayor Durkin and the city council, not as from a threat perspective, but at least strategically thinking what's in the best interest of all the citizens of Seattle. Right. How can I fashion an approach that's going to, partner together again, and not just the Amazons, all the small businesses too, the Igniuses and the Imperities and the Accolades. And I could go down a long list of companies that at the moment have chosen to build and grow their operations in Seattle. But, they're concerned about crime. They're concerned about needles on the street. They're concerned about homelessness. They're concerned about, transportation issues as well. I think you could work together to build a winning strategy for the whole community.
I'm glad we dropped Karen and Igneous into the conversation. You'll be very happy. That's great. I mean, I would just end with the last thing. On the homelessness issue and kind of the city more broadly, isn't it? I mean, it is kind of, as an outsider looking in, it is amazing that these two large, incredibly wealthy cities, San Francisco and Seattle, just do not seem to be able to find good solutions to some of these problems. Like, is it just that complicated and that hard, or is it about this sort of corporate-private partnership?
Well, it is complex. So in the last few seconds we have here, we can't, it's going to be overly simplified.
Matt, I want you to solve homelessness in the 30 seconds we've got left.
Well, what I would note is, let's just compare Bellevue to Seattle.
Right.
Bellevue what are they doing differently from Seattle, in a state that has generally the same policies and regulations at a high level? And so, there's ways to address these issues. I think in Seattle, out of some genuine good intent around compassion, we've taken laws and not enforced them. We have been permissive to a fault. And then it appears that we've done a lot of spreading around money, because we're spending hundreds of millions of dollars today on the homelessness issue, to a set of organizations that have mixed results. There are some great ones.
Right.
Plymouth Housing, Union Gospel,
right.
Mary's Place. But I would probably say let's focus on the ones that are really doing a great job and what their particular focus is, because all of those have different strategic focuses around the homelessness issue. Let's be willing to enforce our laws, because in the long run, that's helpful to everybody. And then let's apply our compassion within boundaries so that we really can be helpful to people. And we are treating them with dignity, both the people that are struggling through homelessness and all the other citizens in the community that we need to be respectful of as well.
Matt, thanks so much for the time today. I appreciate you being on Blind Spot.
My pleasure. Thanks, Steve.